Adobe stock is in big trouble this week. This week, Adobe stock is going to report earnings, and what's also going on this week? SpaceX IPO. Let me explain. What's up, homie? This is Howie. I'm a principal AI engineer with a PhD in physics. Welcome back to Howieverse, where investing is driven by data. In this video, we're going to discuss about Adobe stock. Where's the price action, the previous earning, and how is the outlook for this upcoming earning, and how SpaceX IPO is going to influence the stock price. Let's get to it. Hey, before we dive in, just a real quick reminder. Please don't take the title of the video literally. I grab your attention by using the title then to teach you the process, or even better, sharing the real data with you, the data that Wall Streets are paying attention to. I will never tell you to buy any stocks or sell anything. I'm not a financial advisor, and you should not buy or sell any stock just because I do or anyone does. We're all here to do one thing and one thing only, that is to learn. Let's get to it. Here is the price action of the Adobe. We have a really beautiful downsloping parallel trend line here. Definitely not looking good, although it's beautiful, right? It takes the low here, and the high here. And look at the midpoint over here. It's trying to get above it, but it fails several times. And if we look at what's going on in the past few days, past few weeks, zooming in into this most current price action, we also have this upsloping trend line, okay? So this is definitely a better news than this downsloping trend line. And what happening here is that we see the stock has bottoming out here. And also, not only that we have a bottom here, we have a change of structure of the stock where we got higher high over here, higher low, excuse me, and also a higher low over here, right? And here's the recent high, and then there is another higher high over here, and then it tried to pierce through the parallel line. Obviously, it got rejected and it went back inside the parallel. This is definitely not a good news, although if you look at this, right? So this is the price point that I didn't just draw this today. Let me change that to 275. You actually seeing me draw or like make the trend line better live. So basically what happening here is that it tried to tag this line 275 line, but it got rejected. So that's a bad news. Also, when we have this 255 line, 255, let me get that better, right? 255, not only that it went below it, right? And so these two indicators definitely telling me that the stock is not looking good in the short term, right? However, this higher high or the lower low hasn't been broken yet. So that is a good news. Next, we're going to look at the business fundamental based on the last earning report, and based on the balance sheet itself, we can look at Adobe is definitely a cash generating company where currently they have $6.9 billion in cash, and there's essentially not a lot of change in the total current in terms of cash, but in their current liability they only have 4.11 billion in current liability. That means in a short term or in a year, this company is fine, easily paid off, okay? And the second thing that strikes up to me is that the expenses. So they have been reducing the expenses by 15%, which is really good. And also the backlog grows 5.4%. So if we annualize the backlog, right, that is 22% annualized increase in the backlog, means the business is expanding. And the thing that I don't really like here is the debt. I don't know why they are issuing the debt where they are printing cash, right? Although it's good, they have been paying 13% of the debt itself, but it's still kind of high, although they can easily pay it off in 8.5 months based on the net income. Overall, I give the balance sheet an A minus. There's no sign of struggling of money. The backlog is definitely solid and the expenses reduction is 15%. However, I like to see more cash because this company is a cash generating machine and further debt reduction. Next one, we're going to look at how strong the actual business is. The first thing is the total revenue that is increasing 12%. It's a solid number that Adobe has been putting out years over years. And also the cost of revenue is only gone up 6.8%, which is a lot less, like more like about half of the total revenue growth. And this is so small of the pot, and they have almost 90% of the margin that is going to the bottom line, right? So that is definitely good. Not only that, the margin improved from 89.1 to 89.6. The operating expenses where the sales and marketing gone up 14%. I'm not too worried about this 26% because this is a very small chunk of the business. And what's driving the high marketing? This can be good or bad, it depending on the CAC of, so basically the cost of acquiring new customer. If they can do that successfully, then this is a good sign, right? When where they spend their money in marketing is not actually good or bad. The next thing is the net income. The net income only grow by 4.3%, which is has been driven by the sales and marketing costs. However, this is still solid. What's better here is the share reduction. So as an investor, you do not want to get diluted away. This is the reverse of dilution, where the share, the pot of share out there that can be bought is -6%. So they have been buying back their share as the stock price gone down. And I'm going to show you something that is really incredible later, why this is going to continue, okay? So you can think of this share reduction equals Adobe price going up. Now, overall, the income statement is an A minus. The marketing is high. Don't know if it's paying off. It depending on the CAC or the cost of acquiring customer. The next thing, what we're gonna look at the free cash flow or the cash flow statement. 19% cash flow growth. That is very, very solid as a company. So they have almost $3 billion that they can use to do anything for the company. They can reinvest into AI. They can repurchase stock. Overall, this is really good. If you look at the repurchasing common stock, it's reducing by 23%. But if you look at the newest document over here, what's they're reporting on the Adobe is that they're announcing new $25 billion $25 billion stock repurchasing program, essentially from, I think, from 2026 all through 2030. And let me put this into perspective, okay? 25 billion stock repurchasing program, that is equal to 1/4 of the total market cap of the company. The market cap of Adobe right now is 100%. The new $25 billion in stock repurchasing program is definitely good news. That is 1/4 of the total market cap, okay? So if you think about it, if the price gone down even further, this 1/4 is going to increase. So in English, what that means is that if the price of Adobe just stay the same, the price is going to go up because of this new $25 billion stock repurchasing program. Now, in addition to the $25 billion in buyback, they still have remaining about $4 billion in the buyback repurchasing program that they issued back in March 2024. So overall, they have about $29 to $30 billion that is still remaining to buy back their share. So what we have discussed so far is that the price action is neutral because it's still inside this upsloping parallel trend line. And the second thing that we discussed was the business. The business looks really solid. The balance sheet is A, the income statement was A minus, and then the cash flow, the growth was the free cash flow growth was 19%, which is really, really good, right? Now, I just would like to get the bear case over here, right? So although the earnings beat, the stock has been falling for 3 years, gone from 600, 700 level all the way now is $256-ish. And the SpaceX IPO, which is coincide to the earnings, is going to make Adobe stock forgotten. Even though Adobe report good earnings, and if there is just a slight miss in the AI ARR or the annual recurring revenue for the AI side or the Adobe Firefly, this is going to send the stock down even more. And obviously, cheap stock can always get cheaper, right? And also the software stock in general, like when you look at the whole software stock, there is no sign of bottoming yet. Okay. Now I would like to counter my own bear case because this is just related to the Q2. Was it Q2? Yeah, Q2 earnings. So just my counter, there are like a lot of weak counter here. So basically, the only strong counter is the buyback of $25 billion. When I look at this, also this has already been priced into the stock because this news came out in April. So there are not a lot of good counter that from the bull case to essentially compensate for the bear case. So most likely the report is going to be bad. Hopefully I'm wrong, but it's just that the bear case is so overwhelming to me when it's coming to the this upcoming earnings. But who knows? Anything can happen. Earnings is usually 50% coin flip, right? 50% going up, 50% going down. What Wall Street are actually paying attention to is the AI story. The AI story has beat the Adobe stock down from 600 now to $256. And the story here is the AI ARR growth, okay, or the annual recurring revenue. If there is no inkling of monetization or there is no news about how this has been growing, that is going to send the stock down even further. And the executive last quarter, they say the AI ARR has grown triple year over year. But that triple means 3 multiplied by a small number is still a small number. So Wall Street needs a bigger number for the AI ARR. Last quarter was $250 million. If you compare the $250 million of the ARR, that is the total ARR that is at $26 billion, $250 billion is very small. In the upcoming earnings report, I can't help it but leaning towards the bear case because it coincides with the SpaceX IPO and also the AI ARR showing no path of monetization. If you like this video, please hit the like button down below. And if you like more video analysis like this, consider subscribing for future videos. I'll see you in the next one.